Good morning. We are live. What's up, guys? How we doing? So, business first as usual. Market is open. We have about 6 minutes till we can start putting on some trades. So let's get through this. As far as news today, 9:30, EIA crude oil inventories hit at noon. Trump is participating in a dinner in the Middle East. We'll see if we get any news headlines out of that. And then later on this evening, we have a Fed speaker. But as far as news between now and midday, which will be the end of the stream, we're pretty much all set. Crude oil inventories, again, that might move the S&Ps a little bit, which might move the Nasdaq a little bit. We'll see. But usually we don't get too much volatility out of there. And then again, as always, random tariff headlines are of concern. So live stop orders are going to be run all day. Again, trading naked, if that's what you like doing, if that's what you're into, you sicko, that's cool. But in this market, you gotta use live stops. All right, now, market inertia. Let's see what's up. Range bound. Okay, yesterday what we saw was actually a bit more of a trend day than we've seen in the last couple of weeks. I suppose what I'd have to say about today is I'm keeping an open mind to trends. If we want to trend, that's actually great. That would provide a lot of opportunity for me and for a lot of you guys who I know trade a similar way. But I'm skeptical because it's only one day in a multi-week stretch of really aggressive wicks. You see the bottom? That's just the New York session. Really aggressive wicks, really small bull and bear bodies. That says a lot of false breakouts happened. Okay, so I'm open-minded but skeptical is how I'm looking at the, I guess, transition into maybe some trend days here moving forward. Again, very skeptical, open-minded. So, market is up about 80 points, less than 0.4% as we sit currently. Again, this pump off the open, institutional stuff going on. Big old dump off here. Let's give it 2 more 2-minute bars, and then we can start talking about putting on some trades. What's up, guys? How we doing? Ram, Dale, Pumple, Scrumptious, Scott. Scott's up 17,000 on the day already. Let's go. Chris, Mio, Rick, how we doing, guys? Steven, good morning. Gaines, welcome back. Wrongly Rightish, welcome back. Pat and Mitz, how we doing, guys? Cameron, Skipper, what's up? Old school, what's going on? Trick Biscuits, Sonia, how we doing? Gaines? I think I hit you already. All right. All right. Let's get up top here. Okay, this is real. Now, I know a lot of you guys like to trade the 15-minute opening range. You're getting about a 100-point range here. Now again, if you're someone who trades the 15-minute opening range breakout, which I know it's super popular right now, must be getting touched on a lot. You have to understand that in a range market, it's not going to work. In a trend market, it'll work very well, assuming you execute somewhat half decently. But the problem is that, and what steals a lot of people's edge, is they'll trade very well in a trend market for a week and a half, trading one thing. Let's pretend it's the 15-minute opening range break. And then we transition to a range market. And for 2 weeks, they lose money because they don't adjust their thinking. And then they just think, they lay back in their chair, they go, why, I suck at trading. I shouldn't have told anybody about this. My friends, oh my God. What are they going to think of me? Oh, my girlfriend, my wife, my husband, they think that I'm doing well, and here I am 2 weeks, I'm a loser. No, you just didn't adjust your thinking for the range-bound market, the market inertia. That's it. That's the problem. So you gotta understand these things. Again, we talk about market inertia. I don't just like hear myself talk. By the way, that was actually an accident, but that's what we're sitting at. As far as on the day, of course, I'm flat. Those are the accounts that we're going to be running here today. We have, I think, what do I have loaded up? I have 10 Apex funded. Actually, I think I have, I forgot to load up the 300K. I got a 300K account yesterday afternoon. funded. So, but that we're not going to trade that today. That's fine. It's not loaded up. And then I have 3 take profit pros. But that's why we talk about market inertia every morning. Okay, I don't just like hearing myself talk, at least not too much. So that's why we talk about it. It's very important to understand. Okay, taking big breakout bets in a range-bound market is a bad idea. And taking range bets, for that matter, like trying to scalp every channel you look at in a trend market, that's how you get blown up. Assuming you're not using live stops, which we always should be, at least in this market with tariff news. All right. Exposed, good morning. Rufio, how we doing? Tony, Marshall, what's up, guys? Wonder Monkey says, yep, that was me exactly, LOL, with the opening range breakout. Yeah, listen. Some setups work well in certain market conditions. For example, you guys see me trade continuation a lot? The continuation setup you guys probably all know and love at this point? At least know. The problem with that setup is if we end up in a really tight range market where there's not even enough room, we're not breaking out, certainly, but there's not even enough room inside of a range to get a continuation setup with room before the other side of the range, that setup kind of goes out the window, right? I mean, there's really no way to even trade it, let alone it wouldn't even work, but we're not getting the setups to begin with. All right, Josh says he's here, so we can get started here. Nia, how we doing? Good morning. What is your recommended account size prop? 50K? Well, listen, here's the reality of, let's use the Apex accounts, for example. The 300Ks are fantastic, but they're harder to pass. If you're earlier in your journey, I think that the 50K is a great choice. They're relatively easy. If you're like, man, I just blew 10 50K evals in a row, I get it. Okay, but the better you get, they're relatively easy to pass the 50Ks. Most people should be able to pass them in a couple of tries. A few tries, I'll say, tops. So I would say the 50Ks are a good bet. Not to mention the evals are cheaper than the 300Ks. But the 300Ks, once you pass them, that's the better asset, obviously, to hold a 300K funded account. Higher payout limits for the first, 5-6 payouts. More drawdown. It's less of a pain because you can still trade small. I still encourage you to trade small even in a big account. Still micros, if not 1 mini if you want to push. But, you can size down even a little bit more within reason. And the average account size on a 300K is going to be a little bit longer than the average account length that you hold it. Is going to be a little bit longer than the average on a 50K account. But in the early days, the 50K, even in the later days, having a lot of your accounts be 50Ks, I think is a good idea, just because if you do happen to have some kind of mistake where, oh my God, my copy trader just loaded me up with 100 contracts and blew all my accounts. It's happened to me. It was a copy trader issue when it happened to me. They're relatively easy to get back. And the evals are cheaper. Stefan, is 25K better than 50K as your first funded? By the way, I'm keeping an eye on this bar. We got to watch this. These are kind of outsized. Okay, so I want to watch this wick. And a little bit of a wick back here. Here comes the rollover. Okay, I'm going to watch this bar now because these bars are outsized and there's only 2 of them. So I'm going to watch this third bar. If we get a nice push without any kind of, bearish hope, I should say, being written on the wall, then this will be a good setup here for me. We are well into 845 territory, so I can put this on. Okay, Stefan, back to your question. Is 25,000 better than 50K as your first funded? It's even easier to pass. I think 50K is a good balance. But if you're like, I just want to spend as little as I possibly can, maybe, to get in a funded account, 25K is probably your best bet. All right, we got 1:14 left until the close of this 2-minute bar. Let's see if we get a nice little entry here. I need to see this close at or very near the low of this bar. Okay, now I'm thinking about that break-even point as well on the Nasdaq. There's not any S tier or tier 1 level in the way, meaning like 20K, 21K, it's not in the way. Break even on the Nasdaq is the only really, because we're testing that pretty much right now. And that's break even on the day percentage-wise on the Nasdaq, right? So if we can get a close near the low of this bar, that would put us below the break even point on the day, which is fine. If we look at the 5-minute chart, you look here at 25 seconds. This is pre-market, so I'm not really into that, but we would already be below there. Bulls are wicking this up here anyway. I'll get ready just in case. Yeah, bulls are wicking this baby back. It's not unexpected, by the way, when you've been in a range market. Now, by the way, okay, so let's look at this. Yeah, let's look at this. If we look at that 15-minute opening range, it gets set from here to here, okay? Because, you know, 5-minute bars ends here. Here to here. Okay, boom, you get a breakout of the 15-minute opening range, and you get a push, but depending on your profit target, you immediately get a wick backside. Okay, now, we got a little bit more follow through than we would if we were in a true range market, because yesterday we had a little bit more hint at like writing on the wall, like, hey, maybe we end up entering a little bit of a trend market for a few days, maybe. But today's gonna be very telling whether or not we do. But there's still, you know, a big range flavor in the market, 100%. But you want to have a setup, at least one good setup for both markets, range or trend. Ideally, a couple that work well in both, at least most of the time. Well, what I really mean by that is a couple setups that can work in both. But for example, like my channel scalps are going to work better in a range market. My continuation scalps are going to work better in a trend market. But you guys see I cross over if the setup presents itself. Like if the range is really wide, if it's a 120 point wide range, you can get continuation inside of the range, for example, is what I mean. All right, so looking at the 2-minute chart here, what is this? Very clearly a reversal attempt out of the bulls. I mean, it's the same thing all the time. You get a couple of big bear bars, right? Or bull bars, reversal to the bear side. But in this case, bear bars. You get a big old doji. In this case, a bull doji, holding that previous bar as low. And then you get a push upside attempt. Now, from here, it really becomes 50-50. Do we see a small, little, weak bounce? A mushy bounce, so to speak, and then a fade? Or do we see nice, strong continuation back upside, in which case I would put on a continuation trade if we cleared the 20 EMA, not on the 2-minute. This is a 2-minute chart. I don't care about that one. I'm looking at the 5-minute because that's what everyone else is looking at as well. So this bar is actually very, very crucial for figuring out kind of the feel on the day. Yeah, we pretty much tested going right on the day, and you can see that break-even point is causing a little bit of a hang-up. Bulls are getting some confidence from the break-even point. We'll see if that ends up being, I don't know. I think the bears are going to want to see a little bit more red and just test that region on the day. These break-even points tend to just stick, and then the bulls and the bears battle and just fight over it for an hour. What I really want is us to just push one way or the other and get away from break even. That way we're away from any S tier levels. Like there's no 15,000, obviously 20,000, 25,000. There's really no tier 1 level. You know, 21,000 if we break downside could come into play. If we break upside, there's really nothing. So that's what I'm thinking. Okay, here we are, 15 points away from testing break even to the downside. We're still green, the Nasdaq. Here comes another potential test of break even on the day. Gage says, how do you calculate inertia? What do you look for? Well, it's not really a calculation as much as it is a discretionary conversation. I look at the daily chart, and I just look at the New York session because that's what I'm trading. I don't need Globex muddying the water, at least for me. I prefer to just look at the New York session here on the daily. So each candle is one New York session. All right. And you look, okay, we have a bunch of small bodies and big wicks, relatively big wicks compared to the candles. What does that tell you? Well, we tried to break up, failed. We tried to break down, failed. Here, tried to break down, failed. Ooh, finally a bar that looks more like a little bit more like a trend bar. It's small, but it's getting more in that region. That's the first one we've had in a couple of weeks, really. That's what I'm looking at. You want to keep it simple. You don't want to, I think a lot of people think that trading everything that you're thinking about needs to be so complicated. I think the more simple you think, you need to be clever. Like, for example, you want to look for stops that you can use for rocket fuel within your trade. Like, you want to be clever, but you want to keep it simple. I think that's like the ultimate level of having trading smarts, is understanding that the more complicated you make something, the less the market is probably going to care, because the less people and algorithms are actually noticing what you're spending hours looking at. What's important? Self-fulfilling prophecy levels, like really obvious trend lines that everybody can see and every algorithm is looking for. Really obvious levels like 20,000. The break-even point on the day can cause a hang-up. It's not good enough to trade it, in my opinion, but it can cause a hang-up, so it's enough for me to stop, to not take a trade if I'm going to run into that. Adding stop losses. Well, to your trade, but what I really mean is using stop losses, hunting stops, to help push you further your direction, because those are orders that hit without even really an opinion. That's free liquidity for you to use if you can target them enough. Meaning you get a good setup where, okay, right before my profit target, all these stops would trigger and help push me even closer. That's a little bit of additional edge on that trade. Because that's just a bunch of liquidity that triggers just to protect people. They're making a decision in that moment, but they're offloading that decision, just accepting at that point that they're wrong. And the reason we can do that is because everybody gets taught, and naturally, even if you don't get taught this, to put your stops in the same place. Where are relatively tight intraday traders' stop losses right now, if they're short? Where are they? They're here, right? Obviously. Where are the intraday, longer intraday swing trade short stops set? Right here, obviously, right? They all put them in the same spot. It's called a sucker stop. They all put them in the same spot. Well, let me put it right above this bar. Let me put it right above the high of day. And then you have a big chunk of free liquidity. And what are they? Buy market orders, because they have to buy their shorts back, and they're going to hit it with a stop market. So they'll buy at any price. That's good for the high of day. I would say this, good for maybe a 5-10 point pop. High of day, maybe good for I'd say a 5 to 20 point pop. These things just make sense. A lot of people trade on things that don't really make too much sense. It has to make sense in futures. Well, in everything, but especially here. All right, we're getting a little bit of back and forth arguing here near the low of day. Okay, just waiting for a nice little setup to present itself. DJ, good morning, Wrench. Been watching these videos every day after work. Last few days watched live. Helps a lot and enjoy learning with you. If all goes well, going full-time trading in 1 month. Sounds good, brother. Get after it. Melissa, good morning. Dieselman says, where are the long stops then? Well, think about this, right? That low of day has only been set in stone for about 2 minutes. How many stops can really gather in 2 minutes? How many new people took positions in the last 2 minutes and put their stop right there? Probably not all that many, not compared to the high of day shorts that has been set in stone for a while now, half an hour almost. Right, so I would say that there are stops right below those 2 bottom wicks, but there's probably not that many yet because it hasn't been there for very long, right? So when you're pushing in a downtrend and you're hitting new lows every 5 minutes, you're going to get maybe a 5-point, 10-point drop on those stop losses, but it's probably not going to be good for a 25-point drop because there's not a million stops because they're short-lived. Evo, no, I took no trades afternoon session. I sat, but there really wasn't anything good. So I was like, you know what, whatever, I'm just going to trade an eval. I traded a 300K eval, passed it up, and then I forgot to load it this morning. So we'll have that tomorrow. Scooby-Doo. Morning. What would have to change for the market to become a trend market? Well, we'd have to see the New York sessions be very representative of a trend market, ideally in the same direction for 2, 3, 4 days at a time, with small wicks, not big backside wicks. They can be there, but discretionary call. They need to be reasonable. That's it. You know, by the way, it's just a sliding scale. Once we get into a trend market, I'm not going to come in and trade so differently than you guys are used to. I'm just going to come in and I'll have slightly more confidence in moves continuing and slightly less confidence in, let's say, ascending resistance levels being a problem. That's it. It's a sliding scale. You just adjust a little bit as a trader. It makes all the difference in the world when you adjust for market inertia. Taz, good morning. How we doing? Vinny, good morning. How we doing? Finally started trading MNQ. I've joined the dark side. Man, I think getting sucked into trading NQ with prop is the dark side. It's the dark side of personal ego trumping your familial responsibility. It's too big. Trading the NQ is too big for 95% of prop accounts. They make the rules tight on purpose, and then they dangle the carrot. Hey, you get a 50K, you can trade 10 minis, baby. Don't you want to trade 10 minis? And then they got you on your calculator, you're like, $20 a point times 10. If I just get 20 points a day, it's like, I mean, come on, they're dangling the carrot. You got to outsmart the system. Scale horizontally, not vertically. It makes all the sense in the world. All right, just waiting for a little setup here. Again, I'm kind of thinking downside here. If we can get a 3 consecutive bear bars. Chris, good morning. Is it Isaiah Resendez? Apologize if I'm pronouncing that wrong. Really learned a lot from your trading style. Simple and straightforward. Helps with my consistency tremendously and dialed in my futures trading style. Good to hear it. Happy to hear it. Hope you see you become a regular in the chat. Okay, I'm watching this bar here. Let's see if we can get this being a nice growing bear bar. And I would really love to stop hunt some of those lows. Again, not as good as the high of day. It hasn't been around for very long, but with each additional bar, a few more stops are gonna end up down there. Yeah, Wonder Monkey says if you only care about the 5-minute 20 EMA because people, this is a smart question, because people see it and care about it. If that's the case, why not use volume weighted average price as well? Well, you know, that's a fair point. I like volume weighted average price on stock. However, and that's what I use. I don't use a 20 EMA if I'm trading like small cap momentum stocks pre-market. I just use volume weighted average price and like a 9 EMA, a quick EMA, because I know that's what people are watching. But on futures, I don't pay as much attention to volume. I was actually thinking about this the other day, and I was like, how can I explain this in a way that I think about this? With small cap momentum stocks, let's say you're captain of a ship and you're over a reef. You're going to be taking depth, right? And you're going to be paying damn close attention. Or you're tearing the bottom of your ship up. Maybe not if it's a big steel ship, but let's say you're a sailboat. If you're over a reef, you're paying close attention to depth. If you don't, you're lost at sea 50-50. But if you're in the middle of the Pacific, are you staring at the depth monitor? Probably not. It's just so deep, it doesn't matter. You don't have to worry. There's not going to be an underwater island in the middle of the Pacific, at least that you're not going to see. That's how I think about small cap momentum with volume versus futures with volume. Volume is everything in that world, the stock world. Small cap stock world. In futures, this market is so damn deep that I think it's a waste of mental capital. For me, if it helps you make money, use it. Use it. We only have so much mental capital to go around. I prefer to look at other things. So volume weighted average price is just a different way of representing volume than the 5-minute 20 EMA. Right? I mean, it's a similar indicator really at the end of the day. So I could swap out volume weighted average price and look at that. But they're both heavily watched. So there you go. There's my answer. Benjamin, good morning. All right, let's see if we get a little ascending channel forming here. We're in the early stages of what looks like it could be a little ascending channel, but honestly, I'd prefer to see just a breakout. But I'll try what we get. Chris says, do you let the trades play out the same on a 300K eval? If you're trading bigger size and go 20 points in the money, then it reverses. You get whacked twice as hard. Yeah, so listen, the evals, I don't want to be a bad example, but I don't think I am. I think this is just the reality of this. If you're getting payouts and making money consistently, there's opportunity cost involved. You don't want to worry about the expenses too much. You want to be smart and not just straight up gamble on the evals and waste a bunch of money. But listen, if you're making money from the funded accounts, you can't be spending too much mental capital on evals. So what I do is I buy the eval, I load it up, I take a big risk on the first trade, and it's a scalp. I take a good trade. I put on a good trade. Maybe not a great trade, but I put on a good trade as a scalp. I hit out quickly, and then I continue to size down until I get to the finish line. The biggest risk is on the first trade, because guess what? I'm thinking about my time more than anything. If the first trade is not going to work, and it's just going to hit me out, I would prefer to know that quicker. Because of opportunity cost, okay? So I take the biggest quote-unquote risk on the first trade, and then I slow down as I'm deeper and deeper and closer to the finish line, and my time on that eval is more valuable. That's the reality. If you do that and you're like, Nico told me the wrong thing, that's your problem. That's how I trade it. I can only tell you my truth. Sometimes is that first trade not going to work? Damn straight. Sometimes, but like, you take it on the chin and you move on because your time is more valuable if you're making money from trading than a $30 eval, than a $60 eval. Are you here to pay an electric bill or are you here to go big? Straight up. All right, watching this here, we got 40 seconds until the 2-minute bar close. See what we can do. Good morning, Perfect. How we doing? All right, if we can get a nice... it's tough here, because look at this. Let's go all. This is, again, the closer we get to vertical, the less I want to draw it. But I have to pay attention to this, because if we closed here, and I was like, I'm just going to buy the rollover. Guess what? There's a trend line that... Am I just going to ignore that? No. Do I care about the trend line when I short that? Hell no. I'm looking at that because I know that bears are going to gain confidence from whatever they possibly can. So I'm thinking about that. What I would love to see happen here is a nice close near the low and then a push down and a close like here. Because then we're outside of any ascending support that the bulls would have. And then we got some stops to hunt, and I would put that on 100%. Yep, video I'm watching for that little ascending support. It's pretty aggressive. More aggressive meaning closer to vertical it gets, the less interested I am, but I still need to see 3 touch points. So this would be a touch point or a break downside through, which presents 2 different ideas. So whatever happens here, we still have a trade idea on the table. Chris says, so big heavy scalp on the first trade, I assume you mean, and don't let any pullbacks double the drawdown effect. There's no way to avoid. Listen, if you take a scalp, let's say you get a 300k eval, you're all excited. First trade you take, it pops 10, 15 points in the money instantly and immediately pulls back. There's nothing you can do. There's nothing you can do about that. You just have to be fast. Okay, if that happens, is what I mean. So, on the evals, what I like to do is I'll take a heavy scalp for my first trade. I don't just guess. I take a good setup and I put on heavy size. Okay. I leave my take profit order far away. 20, 30, 40 points. So if we get a news bar, it makes my life easy. And I still capture that. And then I just manage the winners early, consistently using... It's not even early because I really would have my limit order there, but I use hotkeys to manage. I just have my profit target further away in case we get a news bar, and it makes my life easy to pass the eval because Apex doesn't care how you pass the eval. Like that bar right there, you see that? If you have a limit order out on an eval, now on funded accounts, different story. But on an eval, you wouldn't have captured that. So I leave the limit order further away, and I manage most of the trades, unless it pops and hits, most of the trades just with a hotkey, because I would manage it down there anyway. But I just want to leave it open-ended in case there's a pop that's quicker than I manage, and then I want to capture that. right, we are certainly seeing a range. Now, on a pullback to that ascending support, I would want to see it be a multi-bar pullback. Okay, not a single bar pullback, because that gets too aggressive and volatile. A multi-bar pullback, a couple of bars, and a test of this downside region, and I would buy that. I'd put that on, because I mean, we are seeing plenty of room here inside of this channel. Trev says, no one scalps with brackets. I'm using brackets. Chris says, gotcha, thanks. I'm not getting payouts yet, so I trade small in these 150k evals, but makes total sense for when I get payouts coming in. Yeah, listen, before payout time, trade smaller in the evals, keep your expenses low, and get your edge for cheap. It's not slow. It's not, you know, you not stepping up to the plate or whatever. That's being smart. You're getting as much leverage as possible. You're trading relatively small in the evals, making sure you have a statistical edge early for as little as possible. Your expenses are very small because you're trading small. And then once you have the edge, that's when you say, okay, now I'm going to hit it and start scaling. Slowly, but surely. And then you get massive leverage when the payouts start coming. Okay, here we go. Getting a single bar retest here. Again, I'm not into single bar retest. I would need to see this be a multi-bar retest. And I gotta tell you, I would probably, I know a lot of people would draw this using these two. I would prefer to draw this a little bit less aggressively because we have more touch points like here. If we can see a little pop and then a pull back and a test. That would be interesting to me. All right, watching here. ATR, by the way, is sitting at 32, which is a good thing. Yesterday, we saw a really, really fast fade out of ATR, which, if you're new here, by the way, is the average range of a 2-minute bar, based on the last 10 2-minute bars. Fear and Greed Index just hit. Not that we can do too much with that information, but it's 72 out of 100, indicating greed. You know, it wasn't that long ago. Again, I don't like trade off that or anything, obviously. It wasn't that long ago, though, that the Fear and Greed Index was 9 out of 100. Extreme fear, and now it's 72. It doesn't often move that quick. Diesel Man, can you go over a stop hunt and how to trade it? Sure, it's very simple. If you see it, one of your good setups, unrelated to the stop hunt, setting up, and the stop hunting region would be in between your average fill price if you took the trade and your take profit. That's a beautiful thing, because all that does is you got to think of this ahead of time. Okay, how far away is my take profit going to be? What would my average price be approximately? Okay, that would be 75% of the way to my take profit. I'd hit all those stops, which would add rocket fuel. It would pour gas on the fire and help push me to target most likely. So let's take that trade. That's additional edge. Because once you get 75% of the way to your target, you're getting gas poured on the fire if those stops trigger, which helps you, right? It's less of natural movement that needs to go in your direction, and maybe 10, 15, 20% of that movement is not necessarily natural. It's artificial from those stops triggering, which adds edge to your setup if you got a good setup coming into that region to begin with. So we're definitely getting a lower high here. Here, this shows it better. See this? We're getting this kind of thing. So if we could just like extend that and say, hey, maybe the bulls, maybe that puts that at 35. My entry here might be 305. So that's a 30-point difference. I need about 10 more points to push to target. I'm thinking about it. But let's see what happens if and when we get a test. Yeah, Zach is asking, was that high enough for you to buy the support test? I would have preferred had that popped a little bit higher, at least a few points above like 21,350 to get above that previous bar's wick. Well, really 55. All right, let's watch here. This is the better look. Yeah, all right, let's get ready here. See if we can get a nice controlled test. And I'd have to put that on, so let's see if we get it. Bar rollover here coming in about 5 seconds. Pretty good. I don't like to enter channel scalps on the rollover. Didn't get a hard test. Not in. Yeah, it looks like we wicked, but I gotta tell you, when I was watching the bull body, I think that was a little algo wick, because I never saw us get within that region. That was a very quick wick. So holding off there was the right call. I just gotta see another little test here. It'll likely be interesting to see, because we'll see here how this bounce reacts. Here we are coming into this really obvious little area that I know some bears are going to try to step in. But if we end up popping through, that's actually perfect, because then if we get another retest, then I can actually take it. Again, we got close. I was a split second away from hitting that button, but this little wick down here kind of appeared, at least to my eye, after the fact, I think with a little algo fill. Which is fine, by the way. So yeah, you can see here, the bulls are struggling with this region. Like we kind of knew that they might. What's the highest you've seen ATR at? Well, about a month and a half, well, maybe 6 weeks ago. We saw average true range. Well, let me step back. We saw ranges on single 2-minute bars hitting like 400 or 500 points. It was crazy. It was ridiculous. But that was tariff news. So what was ATR at that time? Hundreds. And that was tough to trade. We actually performed quite well throughout that period of time, hitting some nice base hits. But we couldn't do too much trading around that time. I'm sorry, that time of day. We traded every single day of those days, at least from what I recall. But during the tariff news is what I mean. I had to hold off because that was just wild. All right, you can see here we're still kind of struggling with this region here. All right, so right now what I'm thinking here is I'm open to a retest of this trend line. Because we tested that previous bar's wick and we got a little bit above it, which is better than what we were previously seeing. I'm open to a retest. I'm also open to continuation if we want to break upside out of this channel, because that would leave us plenty of room, really, well, depending on the entry, before any reasonable expectation for the bears to pull some confidence from anywhere, like an ascending resistance level or something of that effect. "58 seconds left on this 2-minute bar." See if the bulls can show some backbone. We have shrinking bull bodies. Kind of a tall order to ask the bulls to break this fully out. Starbuck, good morning. How you doing? All right, there's the bears. Now, we are currently, if you're not seeing this, struggling right around that 5-minute 20 EMA. Okay, bulls trying to push this higher now, but really kind of struggling around that region. So, in between what would be our entry and there, yeah, we're looking at 20 points. Well, let's see what we get and take it as it comes. ATR is still 28, though the last couple of bars are dragging it down a little bit. It was above 30. All right, TC. Hope we see you tomorrow. Nah, Pumple, nothing too good yet. In hindsight, it looks clean, but this entry here, to my eye, we really didn't get a test. We were a couple points away, and then that wick populated in a flash, which I think was an algo fill. It didn't really give us too good of an entry. I'm ready to rock as soon as the market gives me something here. All right, there is EIA crude oil inventories. Doesn't move the market too much. If it moves the S&P, it'll move the Nasdaq a little bit, but you know, don't be sitting there rubbing your hands together thinking EIA is going to save your eval or something. Trick Biscuit says, "Hey Nico, do you feel like the market has been hard to trade lately?" You know what? The market's always hard to trade. You know when the market's really hard to trade? When it's doing nothing. You want the market to be moving. Now, there's a limit to that, and the limit to that is a month and a half ago when we saw the tariff stuff. When you get 500-point 2-minute bars, that's too volatile, because it's so volatile that it was causing massive glitches in everyone's trading platforms. It was kind of ridiculous, but that's not normal. Okay, so in regular, moderate to higher volatility environments, you know, whether or not it's really wiki or whatever, fine, I'll take that. What I don't want is the market to be going sideways with tiny little bodies and huge wicks, comparatively speaking, but the range of the bars is like 9 points, so the wicks really aren't even that big if you look at the range. That is very, very hard to trade. Almost nothing develops, but luckily we haven't seen that kind of market. I mean, for any sustained period of time, we really haven't seen that in the last number of years. Really, I mean, 2020, 2021 kind of changed the whole landscape here in a good way, I would have to say. All right, now here we are getting a little break of that flat top. Good, getting some volatility back in. It's good to see bars expanding after a 3-bar period of small bodies. Bumple says, "Were you still trading 40-40 with the 400-point moves?" Let me think. I think I was, but that was before the 400-point moves, because what happened was those big moves, if I remember correctly, you see this wick. Goodness. I think that was more like midday or afternoon. No, it was later in the... It was on stream. I think it was like mid to later morning. But if I remember, I think we had already kind of finished up trading when that started. So, yes, I was, but not on those moves. What will your continuation strategy look like on a 5-minute chart? The exact same. The exact same. I take 5-minute setups if they're clean, even if it's not necessarily on the 2-minute, because the quality, in my experience, is better on the 5-minute on average. Would you consider a trend market easier to trade? I think easier. I think it's kind of a loaded question. I think easier is a hard word to answer. I would say a trend market is far more forgiving to trade. I'll put it that way. But they're also more rare. And you could argue that the risk in a trend market, well, it depends on the volatility. In a high volatility trend market, that's usually when people get badly hurt, especially if you're going counter trend in a strong trend market, like trying to short an ascending resistance. Okay, I'm watching here and not using a stop. If you're wondering, like, when do people, like, how do I avoid getting really badly hurt? You avoid it by going counter trend in a clear trend market without a stop loss. That's how you avoid it. At least that's how you avoid 80% of instances. You can still, 1,000 paper cuts. All right, good. This wick back upside is actually a good thing. That bar was a little bit out of control for a downside test of this little level here. We didn't see the test, by the way. We got close, but we didn't see it. So I'm watching here. If we can get a nice controlled test, that's the trade that I would have to put on. Now again, I'm still thinking about that 5-minute 20 EMA. Haven't forgot about that. Though it became less of an issue on that last bar, and now that we've tested it so many times, again, I know that as we move on with more and more tests of a certain level, it's less and less in people's heads. Like 20K, for example. I'll stop hunt 20,000 first trade of the day, first test of the day, which we did, I think, maybe a week ago. It was a great trade, but I'm not going to stop hunt it the second, third, fourth, fifth test because the stops are gone. They were already liquidated. I'm watching this. If we can get a controlled test here and not on the close and rollover of the bar, I'll put that on. But still have not seen a test. Eric says, I have 2K that I need to double. What would you guys recommend I buy now? Eric, this isn't what you want to hear, but tough love time. At least you should probably, if that's your mentality, if you're like, that's what I'm going to do, fine. You're an adult. You're going to make your own decisions. But rather than coming here, maybe the casino is a better bet because at least there you know your odds. At least you know that if you are trying to double 2,000, you know that your odds are 48 to 49% on one hand. Here, this is a very complicated game to try to just gamble on. But if you're like, I'm serious about this, then I think this is the place to hang out. Personally, I think it's the best place to hang out. But if you're like, I need to double it now, it's the wrong spot. I'd much rather see you take some of that money and use it to learn, maybe by taking it slow, buying some cheap evals or something, gathering data, trying to develop a real edge. But you're an adult, do whatever you want. This is getting tight. That 5-minute 20 EMA wasn't much of a problem on the last bar, but now we're really just sticking to it. It's frustrating when these stupid little levels start just causing problems. Got 15 points of room. Yeah. Here comes a test. I gotta hold off. This is it's getting really tightly wound right here, and I would expect that it's a higher probability of a push through, which we just saw the attempt at. So I gotta hold off here. I think we're probably, for me, the probabilities right now, I would say it's more likely that we end up getting a continuation sequence setting up than it would be that this trade works out well. But probability is probability. It's never even close to 100%. But let's see what we get. A little bit of a pop, but now we're just getting through that 5-minute 20 EMA. I mean, that's barely a 20-point push. Coming into that little flat top on the 2-minute chart. Yeah, see that now. There's a big wick downside. I think the bears are getting kind of hungry for a downside push and a tested break even on the day. But I gotta wait for my setup to present itself. Trading Chris, morning. Sorry I'm late for class. My cat ate my homework. All right, I believe it. Take your seat. All right, here we are getting a retest of that trend line. Again, these, I don't know how to explain this, but when we start seeing a tightening down in volatility per candle, you're coming into an EMA, it's 15, 20 points away on the 5-minute, which is very relevant. And you start seeing these longer duration tests of the trend line. I've just seen this so many times. The probability just starts to shift. Now that doesn't mean that I would short here saying this thing's gonna push downside, but it's enough to stop me from getting long. All right, ATR is pushing down below 25. We're now at 24.5 on ATR. Yeah, see, okay, look at the bottom of your screen. The ATR is the blue line, right? But look at the yellow range bars. That represents in points the range, meaning, I guess, distance covered point-wise, out of each 2-minute bar. See how this is becoming one of those days where you see, we talked about this maybe 2 weeks ago. sometimes you have days where you'll get like a 15-point range, and then the next bar it'll be a 37-point range. And that's not as common. Usually it's a little closer, more consistently. It's a little bit more consistent, we'll say, the range. But these conditions are a little bit, I'd say, more challenging. Okay, because you can't predict the increase in volatility unless we're looking at like stop hunting, breaks through trend lines, continuation setups with expanding volatility, stuff like that. But you know, worth noting that on a day like today, with that range being what it is, give yourself a little bit of grace, because I do think it is a little bit more challenging when you can see, you know, a 12 range bar and then a 42 range bar with no news headlines or anything, and really no obvious break of a trend line, really nothing to cause it. It just happens. It's okay to be patient on these days, especially every day, but these days especially, give yourself a little bit of grace. It's not the easiest thing. You see all these wicks. We're seeing more wicks right now than we've seen, I think, in a little while. Well says hello, second day here, and I love it. Great to have you. Hope to see you become a regular in the chat. Hey, Peter. Morning. Yeah, you see that, guys? We're getting pushed downside. I don't know how to explain this. It's a discretionary, it's an experience thing. I think the more you see these tests, like that last test, I would have loved to get an entry, but I didn't get it because I was probably too slow. But you see there, that was an algo wick down. Can't see it in hindsight, but in real time, to my eye, we never really got an entry on that previous here, right? Now on this one, it acted different. We saw multiple bars. It was just pressing this level. Then if we switch over to the 5-minute chart, you see that EMA is starting to curl. It's pushing harder. We're getting a little descending trend. It just tempts the break. And it tends to happen more often than not when you get that, which flips the edge, taking a channel scalp from positive expected value over time to negative, which means I can't take it. What I really love to see is a downside push. Here again, this shows it better. A downside continuation sequence, and ideally break even on the day would not be an issue on the setup if we can get it. And I would love to see a little continuation short. But again, I don't care which way it goes, as long as I get a nice clean setup. Aaron says, I'm dangerously close to entering a trade just to feel something. You could do that. You can do that. You can do whatever you want. And then your story someday can be, yeah, I tried day trading once. Yeah, it's a scam. I can never make it work. Well, what was up? Why couldn't you make it work? Yeah, I can never make it work. I never really developed an edge. Because I'd sit there and I couldn't wait to develop any real data because I needed stimulation like a child. That can be your story someday, Aaron, if you want to do that. That's fine. You're an adult. A lame ass story, but you can do it. All right, let's get a little breakout out of this range. We are sticking right around this 5-minute 20 EMA. I mean, goodness, look at this. Look at the 2-minute. Time to get a nice little breakout, nice little continuation sequence to the upside. Let's push through this little wick. Maybe do a little stop hunting here or up here, or wherever. All right, nice little push. Now this next bar, if we can get a close above here. A nice close at 58, well, above 58. And I would buy that rollover. All right, we got a minute 20. If we can see a nice close above 21,358, but within reason, like a news bar shooting this up to 21,390 would be too outsized of a bar. But we've got a minute 5 out until we close this 2-minute bar. Nice close, controlled, but above 21,358. And well, yeah, and I would buy that rollover. Let's see what we get. 50 seconds out. Rollover is just the close of one bar and the open of the next. The bar rolls over to a new bar. That's it. All right, we got 25 seconds. Again, need to see a close above 58. That's this previous wick. Come on, Bull. Show some backbone here today. Come on, 7 seconds. There's a bit of a push. 55. Not there. Same idea applies on this next bar here. We're not dead in the water yet. Hey, Christian, welcome back. Come on, Bulls, you're killing me here. Look at this. They can't hold the setup up to save their life. Let's get a nice, clean bull close. We have a minute left to fix this bar. Douglas says, do you ever tire of explaining your definition of a rollover? LOL. No. No. Because it means someone else is getting into the industry. And if there's one thing this industry needs, the day trading industry, with its reputation over the years, that is not the best, let's be honest. If there's one thing we need, it's more retail interest. And honestly, what we need is more retail success, because when retail fails, everyone leaves. And they don't come back. And not only do they suffer, but their family does. Maybe they miss out, or maybe they go and do something else. Great, but... Okay, hang on. Let's see if we get a nice, clean close near the high. We have 5 seconds. Come on, Bulls. Hold it up, hold it up, hold it up. I'll give it 15 seconds. Small little pullback there, and I am sitting long, so I will take that trade. All right, average price here on this trade is $21,367.50. Stop loss is at $21,327.50. And take profit is up at $21,407.50. Break even on the trade so far. That was a nice clean close. We got upside through, obviously, this wick, and then also this wick. Nice close above that wick. Not too big of a wick. Gave it a little bit of time. Got a small pullback to the open of this bar. And I entered. So again, we're break even on the trade. Let's see if we can get a nice continuation up toward 21.4. Take profit at 21.407, which would be a small little stop hunt for a couple of points to push me to target. Doesn't need much. Okay, if we can take out some of these stops, that would instantly put me at target. Now, preferably, I would have had this be maybe 5 points earlier in the trade, so I could take full advantage of that stop hunting, but that's plenty clean for me, so I will leave that as is. Now, again, stop is down at 21,327.50, which is below the 5-minute 20 EMA, right? And, you know, kind of right around, well, this is less relevant now, really. We could extend that, but probably better off deleting it. All right, by the way, ATR here is sitting at about 21-ish, 21, 22. Okay, so if we need to, a little bit of negative reward to risk is perfectly acceptable. But I'd really love to be able to take advantage of those stops up top, even for just a couple of points. But again, in a perfect world, that stop hunting mentality would have been a little bit earlier. At like 25 or 30 points in the money compared to like 37 points in the money. But that's perfectly fine. Yeah, Zach, 3 in a row is nothing. That is nothing. You look at the data, you run the numbers on that, 3 in a row is going to happen all the time. Now, when you start having like 12 in a row, that's when it starts to kind of suck. And the psychology can take a hit. But 3 in a row is no big deal. See, the bulls are wicking these bars back up. Couple of points in the red here. See if we can get some nice bull continuation push. All right, ATR is now at about 20. It's coming down a little bit here, still within reason. You know, below 25, though, is when I start giving myself some permission if I need to manage early, just because I don't want to make too big of an ask out of the market if I can help it. But in this scenario, again, we have that stop hunting mentality up top. There's the high of day wick. But it's pretty close to the profit target, so we'll see. We can get up in maybe halfway to target and see how things are acting if we need to do something, but no emotional decisions. Just rule-based, good decisions, the best that we can make at the moment. And then do it again, accept the outcome. All right, there's a downside push. We're 15 points in the red. Again, stop is way down at 27.50. Which I like where that's at, actually. It's in a good spot. All right, there's a test of the 20 EMA on the 2. By the way, not too relevant. It's not heavily watched enough for me to really pay too much attention to it. I throw it up on the 2-minute for context. But on the 5-minute, it is relevant, the 20 EMA, because it has a lot of eyeballs. That's sitting about 39 currently on the 5-minute chart. All right, now again, that 20 on the 5 is at about 39. So here's the test of the 20 EMA on the 5. And stop for me is at 27.50. If the bears are able to even push it that low. All right, there's an attempted push through the 20 on the 5. And there's a downside push. This may very well turn into a, well, you know, I'm looking at the channel. So bear continuation sequence would not be on the table until one more bar at least. And that's going to stop us. So we're now stopped on that trade. And we are flat, disarmed. Okay, now I'm looking at this. What I'm really watching is, well, I don't even have to draw it. The trend line is already there. I'm watching this trend line. If we can get a close, 20 seconds out on this 2-minute bar. This is an outsized bar, so I wouldn't be able to put it on right immediately on this trade. I'd like to wait at least one more bar. But if we get a rollover and another push, that'd be another trade that I'd have to put on kind of right away. Now, for me, I don't have any kind of rule of like I have to wait such and such time after winning a trade or losing a trade. It's just if there's a good setup, they only come around so often, so I'd have to put it on. But that would require this bar to push lower and then close at or very close to the low. Let's see if we get that here. Now, all things considered, a little flat bottom, this little ascending, which is now broken. We'd be about, yeah, I'm interested in that little stop hunting mentality. It would again be kind of close. Kind of a 40-pointer. It's kind of an outsized bar. Getting there. Not quite yet. Chris says, Nico, has there ever been a moment in your trading career where you went full tilt? Not recently. I don't care enough about the outcome of any individual trade to go full tilt, but 100%. Of course, there's been times. 100%. But they happen less and less and less as time goes on, and then eventually that doesn't really ever happen. And by the way, it's not like you learn a secret or something. You just have more and more data that you can look at that says, okay, when I do this kind of thing consistently, it works. And then you just care less about each individual trade. I think you can kind of tell when someone's really new in their journey when they get, or they're trading way too big, which also tells me they're new in their journey. So you can tell if someone's newer in their journey if they get really, really into the outcome of any individual trade. You're going to have both. You're going to have a whole lot of winners. You're going to have a whole lot of losers. What matters is the end. Okay, so that was a big wick back upside. Again, outsized bar that's kind of expected to see. So I'm now very interested on this bar. If we can get a reasonable sized bear bar with a clean close, which we did not get on that last bar. You know, I think about like losing a trade, like when the Dallas Cowboys, if they give up a touchdown in a regular season game, is the world over? No, people say what they want, whatever, but if they go on and win the Super Bowl, did it really matter? Is there ever going to be a team that goes the entire season without giving up a touchdown or a single point? Of course not. Well, it's a very low probability. So don't lay that expectation on yourself. All right, Bulls attempting a little reversal sequence here. Let's see if they can succeed at it. All right, Bulls are pushing this up. I'll tell you what, I'll be back in 2 minutes. Don't go anywhere. All right, we are back, baby. Watching this movement, you get that little red bar breaking things up. It kind of resets some things. You have to wait, let it, well, at least I have to wait. Let it reset. See if we get a nice little setup. Now, worth mentioning here, we are currently retesting this little trend line. I'll tell you what, I like to keep my charts clean. I'm going to delete that, but we know it's there. Just keep that in mind. Hey, Zach, man, if three losses in a row are hurting you psychology, I'm telling you, I think you got to size down. I think you're trading too big. Right, do you have any experiences with firms that allow options trading? Well, Keith, do you mean prop firms or just brokers? No, I don't know of any props. But I gotta tell you, with the amount of leverage you get with futures prop firms anyways, I don't know if you'd want to go down that route of options. Maybe you do. But futures are a beautifully designed trading product. Now, worth mentioning here, bottom of your screen there, that's showing all the New York sessions. Each candle, that's a daily chart, right? But just New York sessions. That body today is relatively small. Okay, the range on yesterday's New York session was 373. And today the range so far is under 130. A lot of back and forth. Take a look at this setup here. I gotta tell you, I'd take it again. In hindsight, it looks like, wow, what an awful trade. That was a beautiful trade for me. I'd take it again. Just happened to fade hard. Now, I wouldn't even say we can make an argument of a big ascending channel yet. I would say you can make an argument for maybe a little ascending support. This kind of to be determined. But you could also make an argument for a little descending channel here if you zoom in a little. So the channel's wide, which is important because volatility is a little bit lower. ATR currently is at about 21. Again, 25 is kind of my ideal minimum. Below 25, I don't stop trading, but I start leaning a little heavier in negative reward to risk if necessary. But I'd really prefer if ATR were above 25, but it's at 21. We're good. That's fine. Michael says, I switched from micro NQ to minis. Oh man, I forgot to change contract amount, got cooked. Rookie mistake. That's one of the most common mistakes. I know, that sucks. When that happens, that sucks. You gotta be... I mean, look at it this way. Now you'll be more mindful and you'll ideally never make that mistake again. But, you know, Michael, my next question is, why were you switching from micros to minis? Was it to trade from a funded to an eval? Or were you sizing up? Sizing up is usually a mistake. Unless, by the way, the time where it might make sense to size up and risk more money is if you, let's say you have a setup in your playbook that comes around twice a year. Exponential bet sizing makes sense when you have a very low quantity setup that's very high quality because it offers more edge. So shouldn't you bet more when you're offered more edge? Technically, yeah. Yeah, technically you should, but most people don't really spend too much time looking for a setup like that. So that's more of an advanced thing, I'd say. Romeo says, forgot to exit accounts and lost 5 Take Profit Trader Pro accounts. Oh man. Yeah, those take profits. Listen, guys, the take profit accounts are a hell of an asset to have if you can get like even 1, but 2, 3 or more take profit pros. Daily payouts are very nice. Which, by the way, use code BIG and it wipes the activation fee, which is a really big deal. It makes it a hell of a lot less expensive, and it's also 30% off. But I like Take Profit Trader a lot. Alright, so what I'm thinking about up here is, do we end up seeing a descending resistance level from that previous wick high? This I'm looking back a little bit right here. Or do we end up pushing through? Now, if we do push through, then there's this to consider. I mean, clearly people will probably be considering this. But if we can get through both of those, we might have a beautiful continuation with a nice stop hunting mentality on the table. That'd be a very nice setup for me that I'd have to put on. We'll see if that can kind of develop here. Wonder Monkey says, I once closed a short early, but didn't know that the broker would leave. Yes, would leave your buy stop open. It hit, reversed, and I woke up the next morning 2,000 in the hole. Whoops. And yeah. It's very good to get in the habit of being very over the top careful, but when you walk away, make sure you're flat, look at it twice, make sure there's no orders out, hit the cancel all orders button, and then close your platform and leave. You don't want to leave things open with your hotkeys live on your keyboard. Your cat jumps on your desk, hits the hotkey because they somehow know the button combination. And all of a sudden you're in the hole. Or you made a bunch of money. If you gave them a good breakfast, maybe they'll give you a bunch of money. All right, watching the test here, we are kind of coming in to that little ascending potential, I should say, ascending resistance here. You see the 2 minute? 5 minute shows it very well. Here's the test. See if we get a nice push upside through there. Of course, the bears are going to step in at least for a second. They're going to try to hold that little ascending resistance. See if the bulls can push through, and then I can start looking for a stop hunting mentality continuation long. Yes, see Jet exactly. Jet says, guys, this is your business. Treat it as such. Exactly right. See, Mac, my cat turns the oven on all the time. Wouldn't be surprised if he took a trade for me. Gotta get you to bake him up some salmon or something. All right, bears are holding this little ascending resistance. Again, I'd love to see them break this. I'm not too fond of shorting ascending resistance levels just because the timing starts to get a little, you have to be a little more careful on the timing. Not careful, you have to be a little more just right, I'll say, on the timing. Than shorting like a descending resistance in a zoomed in downtrend. I'd really prefer to see this break here. Making a test. That trend line currently is sitting at 76-ish. All right, there's the test. Let's see if the bears step in or if they lay down. We got a minute 30 left on this 2 minute bull bar. Well, right now it's a bull bar. All right, there's a push. Nice, nice, nice. Now let's see if the bulls can hold that upside. All right, 38 seconds left on this 2 minute bar. This will also, by the way, be the rollover of the 5 minute bar. $20 seconds. I'm interested more in the setup on the 5 minute chart, honestly. I mean, look at the top left of your screen, but we're seeing a wick back. If we can pop up and get it closed near the high in the next 10 seconds, I would probably, well, I would put this on if the close was clean. We're wicking back now below that trend line, so no trade there for me. Man, look at that big old ugly wick on the 5 and the 2. Gotta hold off there. John says, I have a 90-pound and a 72-pound German Shepherd. If they get on my desk, it would be complete chaos. So, yeah, the Bears are going to step in here and try to hold this level off. But this is really just a matter of the Bulls getting upside through. Again, the market right now wants to stay in a range. You get any push upside, you know, in a regular market, 80% of breakouts are going to fail. Right now, we're in a range market. So probably slightly higher than that. Maybe 85 and 90% of breakouts are going to fail. But if you get a breakout with confirmation of the break, with a good continuation setup, I'd have to put it on. But I also have to be picky with the close of the bar for the entry. All right, ATR is now down at about 18, 19. Tightening down. Below 20 can start causing some issues. Now it's at 18. You can see here, we're really hanging up. We're on that trend line. So the Bears certainly see it. I mean, you can see it clearly on the 5-minute top left of your screen. Very clearly, the Bears are looking at that, and the Bulls are not really having it. So this right now, based on that wick that got above and then failed, this is about 50-50. So I need to see, well, where do we end up going? I'd be open to downside continuation on the pullback. The range is plenty wide enough. You look down at those two lows on the day, 5-minute chart, just before 9 o'clock and right around 10 o'clock. But upside continuation would also be great, because then I could stop hunt those stops that we know, if you look at the 5-minute chart, are right above the intraday high. I think that'd be my preferred setup, because then we wouldn't have to deal at all with the break-even point on the day for the Nasdaq. We are struggling around this trend line here. Come on, somebody, make a move. There's one thing I can't stand. It's this little bickering between the Bears and the Bulls around one little level. Joseph says, feels bullish. Can we trade off of feelings? LOL. Be my guest. This little trend line is really a headache for us right now, isn't it? Come on, Bulls, get a nice push. All right, so we can get a nice push and a close, maybe up in the 90s. Decent spot for that little stop hunting mentality. We got to clear of this trend line first. And I'd prefer for that to happen sooner rather than later so we don't end up messing up any continuation with little red dojis or red bars. Zach says, I haven't broken any rules. I'm trading small, haven't blown any accounts, but man, losing multiple in a row is hard. I'm rethinking doing this full time. Zach, brother, you would love to win 15 in a row. And when that happens, you don't think anything of it. But you lose a couple trades in a row, and this is how, I mean, come on, man. This is the game. This is, by the way, that reality of being able to, needing to be able to lose in a row and not care about the result of any one given trade. That's hard. That's why there's not that many people that do this full time. It's not fun. Winning's easy. Being good at losing is hard. And by the way, I say it all the time, but there's no secret. The secret is to do it more. The secret is to lose more. And the only way to do that is to trade smaller. The only way. That's the secret. Trade smaller, lose more, get better at getting in drawdown and trading well to get out of drawdown. Don't size up, don't break rules to try to get out of drawdown. You know, Zach, there's going to be time, all of you guys, there's going to be times where you lose 8 trades in a row, depending on your strategy. You'll lose, 3 in a row, which is nothing. You'll lose 8 in a row. You might have a losing streak. By the way, you win 12 in a row. You might have a losing streak. You lose 10 in a row. It's like, and then this happens all the time. A lot of winning traders, they're like, what's this all about? Like, I lost my edge. Like, I can't do this anymore. It's like, bro, it's been 4 days. This is going to happen. Run the stats. Go to a site like coda.io and run the probabilities of you losing a certain amount in a row. And you will see that, like, hey, realistically, this is going to happen maybe once. If I trade for the next 40 years, this is going to happen maybe once a year, once every few years, once every few months, depending on how often you trade, how many trades a day you take on average, and what your win rate and stats are. Any losing trader can be good at winning. It's not hard to win. Meaning it's easy psychologically when you're winning. But what pays you in trading? Why do you even why is there so much money to be made in trading? Why? I'm asking. You get paid to put on risk. You get paid to find your edge, put on the risk, and accept the outcome, and move on. If there was no risk, if you didn't have to go through losing streaks, you would not get paid the way that traders do. We are sticking right around this little trend line here. Watch it for setups here. I mean, listen, guys. Trading, this isn't just to sound fancy. This is the reality. Trading is your business. Whether you trade personal or prop, you should have a business model. It's your business. You come in to work, even if you're at home. You make decisions, you accept the outcome, and you leave. Okay? This is your business. So, would anybody ever expect to go open any kind of business? Some big shipping conglomerate, a coffee shop local, maybe a big chain, any business at all. You would never expect to go start a business with zero monetary investment. At least once you get into it, right? There's expenses, and the expenses, if you want to go big, are usually pretty damn high. Trading has expenses. The expenses are losing. If you trade prop, the expenses are the fees for the accounts. It's all going to have expenses. If there were no expenses, I would not even be here wasting my time, because if there's no expenses, meaning there's no losing, then there's no upside and it's all a big lie. The fact that you can lose and the fact that you get paid to put on risk is a good thing, because it means that there's actually money to be made. Otherwise, where is the opportunity even coming from? Everyone wants the big opportunity but doesn't want to put on the risk. We're still hanging out around this trend line here. I'm watching it. If we get a setup, don't worry, we're not going to miss it. ATR is really falling here. ATR is now at about 15 and a half. We want to see that expand. See this range here? A lot of people might try to trade this little range. Here. Pretty tight. I mean, realistically, we're looking at 18 points. Single bar tests, downside, upside, downside. With these little upside pushes, what we've been seeing a lot lately, since we are in more of a range market with potential for trend lines, but more range markets. You see this upside clean, tight upside push. A lot of times you end up seeing a little flatten out, maybe a little ascending flatten out, or a descending, maybe a break downside. But these clean pushes lately, especially contextually with what we've been seeing in the market, we've been flattening out hard after these pushes, just because the bears step in, they're like, all right, that's enough. We're in a range market. Aaron says, no risk usually means one thing. You're the product? Well, yeah. I mean, listen, guys, the best comparison, I don't love to make this comparison, but it is the best comparison because it helps people understand the best. The business model of being a trader is an extremely similar business model to being a casino. Now, I think if we put, some people might disagree morality-wise, but if we put that all aside, a casino is one of the best business models in the world. And what are they doing? Are casinos worried about losing one hand of blackjack? Hell no, they want you to win because they know what their numbers are. If you win, you keep coming back. If you lose the first three hands, like my wife, you step into a casino, you play 2 hands of blackjack and lose them both, you never go back. Like, wow, that sucked. Okay, let's go to dinner. But if you win, you keep coming back. The casino wants you to win on specific hands, and they're gonna hype you up when you win. Wow, good job. And the more you play, the more you lose, because that's how their numbers work. So I wouldn't say they're outsmarting. They're probably outsmarting some people. Most people know that you have a negative expected value when you walk into a casino, okay? But the casino always has a positive expected value, and they have rules in place to ensure that's the case. So as a trader, you want to be the casino. Now, the casino doesn't win every hand. If they did, they would be out of business because nobody would go. As a trader, if you won every single trade, if that was even a possibility, guess what? Over a whole career, you're like never really losing. Who would be on the other side of your trade? There always has to be someone on the other side, which means that they're making the opposite decision at that very moment than you are. You're getting paid to take risk with an edge. Okay, there's no value if you're not taking risk, but if you have a little bit of edge, all of a sudden it's the same business model as a casino. So you should look at your losing trades the same way a casino looks at losing a hand. Now, the only variation in that, where that doesn't really work, is that, if the player wins, the casino can kind of like use it to keep them coming back. In trading, it's just the expense. Say, okay, there's an expense. That's what offers me my edge, is taking on that risk. But I have an edge, so I need to keep trading and taking good trades. All right, here we are, coming into the 5-minute 20 EMA. There's the push through the 2. You look here, top left of your screen, the 5-minute 20 EMA is the more important one. It has more eyeballs, and that's currently sitting at 55, about 9 points away. So I want to watch that test. I wouldn't want to get short on the rollover heading right into there, because I know some bulls are going to try to get some confidence from there, and I would want that to be shot down before I enter. Gain says, I won one hand of blackjack and left the floor. They sent me all kind of money coupons to come back, lol. Now listen, the only way to, I mean, you cannot predictably beat the casino, but the best odds, literally, the best odds to beat the casino are to play one hand your entire life. You win that hand and you leave, you beat the casino. But at some point, it becomes a, not a probability that you lose, it becomes a certainty, a statistical certainty that the longer you play, you will lose. Because that's their business model. The same way where if you have statistical edge in trading and you have rules around it to maintain that edge, it becomes a certainty that the longer you trade, the more money you make. If you have edge, don't miss that part. If you have negative expected value, it's the opposite. Where does that come from? Keep track of your data. It's not that big of a deal. Everyone pushes back on that. It's not hard enough to track your data to even push back. Just do it. It's not a big deal. Write on a piece of paper. Okay, I took this trade, this time, this price, this is my stop, and take profit, and the result. All right, so you guys see here that we are pulling back away from the 20, well, on the 2 minute, but really, we didn't even make a test of the 20 on the 5, so I'm paying attention to that. If you guys haven't done so yet, please press like on the stream. It takes 2 seconds and helps out more than you know. Appreciate you doing it. Well, it looks like we're getting a lot of Middle East money investment into the US over the next 5 years. See some of those dollars over here. That'd be nice, huh? Alright, we're kind of hanging out in this little range. Again, if we get a channel develop, great. If we get a breakout upside with a continuation, great. Break downside continuation below the 5-minute 20 EMA, great. I've got 3 trade ideas right now. Let's just see whichever one we get first, I'm cool with. James, how much did you strategy hop when learning? What made you stick to the breakout continuation setup? Well, I started by trading. Well, I started by trading stock. And then when I first got to the point where I was actually profitable, and actually to the point where I was paying all of my now wife's and I's bills, my wife and my bills, English and stuff, with trading, I was actually trading mostly options, but not in the way you think. I was not buying options. I was utilizing a whole lot of net short option strategies. So net sell, spreads, basic wheel strategies. And that got us through, and I was paying all of our bills by doing that. And then I was like, okay, it's time to start going back to stock and doing testing. And I tested quite a few things. I found a couple of setups that worked well. And then I really transitioned to small cap momentum because it made more sense to me that there would be more edge over there. Turns out there was. And now on futures, I also had to figure out what makes sense for me. What makes sense in the futures market? How are things priced? And it's more efficiently priced than small cap. So it's kind of an opposite mentality. Just testing. You test, you find data, you throw out the garbage, you keep what works. That's it. Pumple, would you be listening to a podcast or something to entertain you while trading if you weren't streaming? You know what? Yeah, probably. Probably. You know, a lot of people might sit here and say, nah, bro, I'm hardcore. I would sit here in dead silence and stare at candlesticks. It's like, well, that sucks. As long as it doesn't take away from your focus, why not? But, you know, if you can't chew gum and walk, maybe you should sit and just watch the candles, which is fine. But I think it's probably helpful to have some light music, a quiet, light, maybe not too heavy a topics, podcast or something. Just kind of keep you company while you're trading. Otherwise, trading can turn into kind of a, especially if you don't have somebody, like if you're single, which I get it. If you're single, especially, trading can turn into kind of like a weird, well, I guess I don't have personal experience with this, but I would imagine trading would become kind of a weird, lonely thing, especially if you were on your own. And there's nothing wrong with that. If you are, maybe do something to keep you company. All right, somebody develop a little channel, break this out. The real problem right now is not necessarily lack of setup ideas. We have 3 setup ideas right now. If we can get this channel forming better, upside continuation, downside continuation, I have pretty good trade ideas all across the board, but the problem is that ATR right now is 15. That's tight. Volatility's low. We got to see that increase. Tips for learning how to do this with a 9 to 5 on the East Coast. Ooh. Well, you'll have to study your data at night and on maybe Sundays. I've kind of for the longest time done data study on like maybe Sunday, midday. Just for an hour or two. But the reality is you're going to have to trade probably, if you want to trade London session, you can get up early and do that. Historically, I know that there's quite a few traders who have traded before work and done fine. That's easier to do if you live on the West Coast because you can trade the New York Open at 6:30 and then go into work at like 8 or 9 or whatever. But on the East Coast, man, that's tough. I honestly... Don't show your boss this, but like, do you have time in the day where you can trade for 90 minutes? You gotta have some kind of break or some kind of downtime, probably, right? I think that's gonna have to be the case. Vinny says, as someone who lives alone and trades early morning before friends are awake, it definitely is an echo chamber at times, especially in drawdown. Yeah, you know what, Vinny? Hey, if you can throw on podcasts or live stream, maybe, I don't know, something you like, just for the company, I do think that that's very helpful. It's kind of a weird thing. Let's be honest, guys. It's kind of unnatural as a human to sit in a room in silence, staring at a fake computer screen that's made up of pixels for hours and hours and hours every single day in dead silence. That's kind of unnatural and a little bit weird. So if you can have something interesting to keep you company, I mean, we're social creatures, something to keep you company that doesn't distract you too much, I think that's the way to go. All right, we are still within this little range here. You guys know what I'm looking for by now. Waiting for that little breakout. Mark says, bro, I'm in Australia, so I start trading the Nasdaq at 11:30 p.m. and go to bed around 1. Yeah, you know what? That's kind of a weird schedule, but it actually works relatively well if you're working during the day. All right, Wonder Monkeys. Hope to see you tomorrow. All right, well, here's what I'm looking at. So this is the 2-minute chart. I want to see if this turns into a descending resistance. We're trying to break through right now. If we get a push upside hard and a nice continuation sequence, I'd get long, looking to stop hunt the high of day. If we can get a nice fade downside through, here's the 5-minute chart, the 5-minute 20 EMA, I would also look for continuation downside. So really, I have 3 trade setup ideas right now. We're just waiting for kind of one to play out. But listen, guys. Hey, Apex, for a little bit less than a week from now, this will be over. But Apex is currently 80% off, and you can pass the evals in 1 day if you use code BIG. But if you're more into daily payouts, that kind of thing, Take Profit Trader is 30% off, but no activation fee, which the activation fee is well over $100. So that makes it a lot less expensive, makes the business model a little bit easier to work out when you use code BIG, B-I-G, at Take Profit and Apex. All right, guys. So, hey, listen, even when the market's slow, man, it's great to hang out with you guys. I will see all of you, all the regulars, plus everybody else, tomorrow morning, about 8:15 a.m. Central Time. All right, guys. Hey, if you haven't yet, please subscribe to the channel, and I will see you tomorrow morning. All right, guys. Have a great day.